For this video, we're digging deep into Nintendo's financial data, their manufacturing arrangements, and the global financial context to show how they may be avoiding a potentially catastrophic error by waiting a few more months to release the Nintendo Switch 2. I'll take you through what Nintendo saw in the data that would prompt them to push back a console that, some reports speculate, has been finished for a significant period already, perhaps years. We'll also show why Nintendo President Shuntaro Furukawa is being absolutely honest that March 2025 is the earliest date he could foresee them launching, and that they simply don't at this point know for sure when they will launch. Two lightning fast disclaimers. Yes, there's no official delay. Yes, any talk of Switch 2 being delayed is all based on rumours, albeit credibly sourced ones. Nintendo could be pulling some incredible feint and dropping Switch 2 imminently. Also, there have been reasons already stated, credible reasons for the delay, including their wish to avoid a 3DS or Wii U style game drought early on by ensuring that the software lineup is really robust. Let me be clear, I'm not dismissing or minimising this as a reason. I absolutely think that the comparison of Switch's launch against the launch of the 3DS and Wii U proved beyond doubt that a strong game lineup is essential, and they have always in recent years erred on the side of delay or just downright not revealing information rather than rushing something to market too early. What I'm going to talk you through is an as well as, not an instead of. But I think there is a broader context that I haven't seen discussed, considerations which Nintendo are less likely to share externally, which is at least as significant a reason as the games lineup and may be even more crucial. As you've probably gathered by now, it's to do with Nintendo's financial situation and indeed the state of the world markets right now. Ask yourself this question: what is the biggest factor causing Nintendo's increased revenue over the last year? Is it the Super Mario Bros. Movie? That division is up 93.4%, but in total this only accounts for 5% of net sales. It's a growth area for Nintendo, but not what keeps the lights on. Is it the release of two huge selling games in Zelda Tears of the Kingdom and Super Mario Bros. Wonder? Both of these games gave a strong spine to the year last year, but no. Despite these successes, unit sales for software were down 4.7%, and unit sales for hardware were down 7.8%, with the biggest hit coming in the older model Switch, which has the best margins for the company. And yet Nintendo did make a significant amount of money, an increased amount of money year on year, and this was attributed to the depreciation of the yen in the foreign exchange markets. To put it into context, the yen declined rapidly against the dollar across 2022, rallied a little by the beginning of 2023, and has continued to slip ever since. Against the euro and the pound sterling, the decline has been much more consistent and is still going. Against the Chinese yuan, the decline has also been steadier over the period of time. We can safely assume that the new Nintendo console has been in the pipeline for a significant period. Whether or not you believe the reports that Nintendo has had it as good as ready since 2023 or not, they undoubtedly started the development cycle in very different financial times for the company. The depreciation of the yen is a double-edged sword. On the one hand, a weak yen means that sales in foreign currencies are worth more to Nintendo, and since 79% of Nintendo's sales are made outside Japan, that's a very good place for the company to be. On the other hand, purchases from abroad are that much more expensive. Nvidia is an American company, although much of their production is heavily rooted in Taiwan, where the new Taiwan dollar is also at historically very strong levels against the yen. Meanwhile, for Nintendo Switch, much of the manufacturing is in Southeast Asia. They already migrated their production of Switch from China to Vietnam in 2019, but the Vietnamese dong is also much stronger against the yen than it was 5 years ago. That's not such a problem if your console is older and you're making fewer of them, but if Nintendo wants to have a huge number of Switch 2 consoles early on to prevent scalping and ensure they make an aggressive start to the next generation, right now is an expensive time to make that investment. That's not to say that they should be waiting. Once they actually sell the new Switch, they stand to benefit significantly for the same reasons that their current games are going gangbusters. The weak yen gives them a lot more chance to make substantially greater profits than they once did. However, timing is everything, and here's where Nintendo has a chance to really win big or to lose catastrophically. The depreciation of the yen is currently largely self-inflicted because Japan has a very different situation from much of the rest of the world. While the rest of the world is trying to choke off inflation from running rampant, Japan's inflation has been stagnant for years, and their fear is actually deflation. The goods will get ever cheaper, meaning consumers decide to wait and wait, choking off markets. But Japan's inflation is heading towards target figures, and there is wide expectation that the tide will turn. When will it turn? You guessed it, the end of 2024. So what does this mean for Nintendo's strategy? Well, in an ideal world, they'd probably be chucking stuff out there like there's no tomorrow to benefit from the advantageous market conditions. But you can't just flick a switch and have the Switch 2 appear. To ramp up production would take months. And moreover, new games technology generally has lower margins. Nintendo has always been determined that it should make a profit on its hardware and never get into the situation of having the hardware be a loss leader. Nevertheless, Switch 2 units stand to be significantly less profitable in their own right early on, even before you consider the change in labour costs from outsourcing the manufacturer during times of an unfavourable exchange rate. Here's the massive danger that Nintendo face. Essentially, it's a financial pincer movement. If they were to manufacture huge amounts now while the foreign labour costs are high, they could find that by the time they get these consoles to market, conditions have changed and they're now selling them for much lower margins because the yen has rebounded against the world currencies. They lose out on the costs of manufacture and they lose out of the profit at sale. Whether or not this could render the Switch 2 the first unprofitable console, at least for its first few months, is impossible to say without knowing the precise details, but at the very least it would be uncomfortable for a corporation that has always prided itself in knowing the value of what it sells. You can just imagine long-time Nintendo veterans studying the data and looking on with horror at the very idea that this long-held principle could be compromised because of an imprudent financial strategy born out of rushing the new console to market. And yet even the fear of this is still not necessarily a reason to delay. After all, they could become caught in a cycle of endlessly waiting for a correction that doesn't come, while the OG Switch shrivels on the vine. But there is another strong incentive to wait. Specifically, there are opportunities that are unique to the current weakness of the yen. If Nintendo stands completely still, their income from foreign sales will continue to increase per unit, but of course the unit sales are steadily dropping. However, with an 8-year game catalogue, there is a huge amount of potential for Nintendo to benefit from something that they haven't done for the entire Switch generation: a price drop. Dropping the price of these games, possibly even the system, would definitely spike the demand. But from a financial point of view, it would be taking the games back to the level of profitability per unit that they were 2 years ago. Not a terrible place to be in. This is a huge chance to do a massive victory lap for the Switch library, boosting sales across the board and moreover boosting awareness of their different franchises, not just Mario and Zelda, but also Pikmin, Kirby, Splatoon, Fire Emblem, Xenoblade and others. Their historic strategy, the strategy they used in the dying days of 3DS, was to use the cheaper, older console to build up hype for the next big thing. They used Luigi's Mansion on 3DS to raise the profile of Luigi's Mansion before announcing the Switch version, and Metroid Samus Returns was announced alongside Metroid Prime 4. The logic is sound. You give new audiences a cheaper entry point option and garner good reviews to prove the quality of the product before launching your big new thing. But Nintendo doesn't have to do that. If they can stoke sales on the literally dozens and dozens of first-party titles that have sold 1 million plus, they stand to benefit hugely. They can reduce that pesky inventory ahead of a new system launching, making a tidy profit for hardly any effort and raise the company's profile amongst consumers into the bargain, keeping people playing their games and excited about the prospect of Nintendo even during a fallow period for games releases. It all comes down to timings, and here it gets even more complicated. You would assume, given that they are Japan's 15th largest company, that they would be paying very close attention to which way the wind is blowing and possibly have a number of contacts at the Bank of Japan and in the government. Note that sitting on their board is Masao Yamazaki, who spent 31 years in financial systems engineering designing large-scale systems in institutions including banks, as well as Katsuhiro Umayama, who is an auditor for a Vietnamese textile firm. There are voices in the room who will be paying very close attention to the global circumstances and advising Nintendo accordingly. But one final crucial element comes into play here. Last year, in a podcast by longtime Nintendo employees Kit and Krista, the eponymous pair talked about how sometimes Nintendo finds itself delaying making decisions because of, essentially, decision fatigue, or as they called it, analysis paralysis. Please check out the original podcast, which I'll link up here so you can get the full context, but let me quote the key bit from Krista Yang. Nintendo can be very in their own heads. They overthink it to the point where they don't do anything. They become paralyzed with indecision. So the pair go on to say that the name that was given to this while they were there was analysis paralysis, and they discussed how multiple times when faced with a significant decision, people in the company would, in their words, talk themselves to death and end up doing nothing. This isn't unusual in Japan, which has a very different corporate culture to the West. In common with many Japanese businesses, they follow the principle of nemawashi, which is the practice of building consensus and following all perspectives. This does have the consequence that often putting the brakes on can be easier than hitting the accelerator. With so many voices, if there are only a few holdouts, the company is more likely to default to waiting. But if Nintendo had analysis paralysis often during Kit and Krista's long stint at Nintendo, just think of the tenor of discussions about the launch of something as monumental and critical to their future as Switch 2. So what does this mean for the next year or so at Nintendo? I do think they will look to spike sales of existing titles, and so I think price drops of titles, Switch Selects or whatever they may be, are much more feasible as a result. Of course, there is another consideration, which is that because they're making more profit per unit, even if they sell fewer units, if they do nothing, they could still make pretty decent money off the games that they've got. Therefore, I'd still put it at the 50% likelihood that they will launch a full line of cut price games, but they definitely can offer more flexibility for different regions to have sales on particular titles, especially for digital purposes where the margins are higher. As for Switch 2, they can't delay indefinitely, so my hunch is that they will wait until they see a big change in the exchange rate between the yen and especially the Vietnamese dong and the new Taiwan dollar, and then go all in to manufacture. The reason for the at least March 2025 statement from Furukawa makes a lot of sense seen in this light, because while their internal development schedule may motivate some of the decisions, I really think the world financial markets are also bearing down on their considerations. I'm putting on screen my previous financial deep dive, my recent look into big selling Nintendo games that they could use to plug the gaps in 2024, and some of my deep dives on the screen right now. Please give one of them a click. Otherwise, see you next time for another Nintendo Forecast.